All right, Trader Coach Carver back here again. In this video, what I want to do is I want to break down the very basics of market structure. What is it? What does it mean? And how can we go through and we find it within the charts, right? So when we take a look at overall market structure, what it indicates is that the market itself moves in three directions. Price moves up, which we consider to be bullish or in an uptrend. Price moves down, which is considered to be bearish or in a downtrend. And then yes, price does move sideways, which is considered to be ranging or in consolidation, creating equal highs, equal lows, which most cases is just simply prepping for a manipulation. So with that being said, I don't want to over confuse you guys. Let's go ahead, let's jump into the market. We're going to talk about the basics of market structure. All right, so here we are. I'm going to be talking about market structure, and like I had mentioned before, the market moves in three directions. The market can move up, the market can move down, the market can move sideways, and I want to go through and I want to give you guys a breakdown for each of those today. So let's go ahead and let's talk about first and foremost bullish market structure. So let's say we were to go through and just give a nice little example of a bullish market structure. Now what happens is typically, let's say price kind of working our way in. Now what happens is price comes up, creates a high, and then we're going to be looking for a higher low. Now, little pro tip for you guys. A lot of people, when you're first starting to learn, people are going to say, hey, this low is higher than this low, so it's automatically a higher low. But the thing is this right here is not a higher low until we break that trading range top, until we break our previous high. So until we break our previous high, this little section right here is not a higher low, because what could happen is price could work its way down a little bit further and it could tap in here and then come up and break it. Now that's going to be our higher low, because from this point here, price was able to break our trading range top, right? So if we come in, we can see we created another higher high. Price starts to retrace a little bit, and now again, this isn't a higher low until we break our trading range top, right? We break our trading range top. Now guess what? There's our higher low. Here's our no higher high. Now when I say this is our higher low, this is our structure point, right? Now what will happen is if price comes down and it breaks that, we are no longer in a bullish market structure, right? Because price went through and we had a change of character, right? Price started to change. We had to break a structure here. Price went lower than our higher low after breaking our trading range top. So now what this could indicate is that maybe we're shifting to some bearish market structure. Now what we would be looking for in bearish market structures is we'd be looking for a little retracement up here, and we'd be looking for that trading range bottom to be broke, right? This is not a lower high, right? In the very beginning, everybody's going to tell you, hey, look, this high right here is lower than this high, so this is a lower high. That's not the case, because price could continue up and it could break that trading range top. So until that happens, until this trading range top and this trading range bottom is broken, we are technically in consolidation, or we're technically waiting to see what is going to happen. So now let's say price continues down, breaks our trading range bottom. That confirms this as a lower high. Now we look for price to come down. Boom. Since we had started to get a retracement through here, we have our lower low, trading range bottom gets broke again, we have a lower high, right? Now another thing that we can see happen is price continuing to move sideways. Boom, 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 boom. When you start making equal highs and equal lows, this is what we consider to be the price moving sideways, right? Price isn't really going up, it's not really going down, it's just continuing to move sideways like this, and this is where people are going to call it ranging, and they're going to call it consolidation. What I look for is this is just simply going to be preparing for a nice little manipulation, creating some liquidity on both sides. We'll touch on that in further modules, but when we break down this video, guys, we see that price can move up, price can move down, price can move sideways. Now let's go through and let's actually identify these and continue to break this down a little bit better, give you guys the ability to go through and give it a nice little screenshot, right? So come in here, this template, we got a low, we got a high, we have a higher low, we have a higher high. We do have a higher low. Why is that? Because our trading range bottom or trading range top was broke from that point, giving us a higher high. Now price came down, gave us a lower low, seeing how it broke our structure point, right? Now we'd be looking for that lower high. Now it's when we get to this point is where we start seeing that consolidation, those equal highs, equal lows, you know, where you take a look at it and you can just visually say, hey, I can draw a line across here, I could draw a line across here. That's where you're starting to see a lot of that consolidation, a lot of price moving sideways. These are typically going to be known as your accumulation or distribution periods, or reaccumulation or redistribution, which we'll get into in further modules. But for right now, I want you guys to be able to come in and just be able to take an overall understanding of the markets, being able to know when price is moving up, we are looking to be creating higher highs, higher lows, higher highs, higher lows, higher highs. And until that next higher low is actually broke, we're still in a bullish uptrend, right? Now, once that price is broke, let's say we draw our line across here, we can see very simply that this right here was broke. That was our structure point. Now we're looking at price, you know, to be going through and creating our lower highs and lower lows, right? And this is where you come through and you can start to understand some of these structure points and what some of this means and how you can look through in the market. And we're going to be going so much more in depth on this, guys. I want you to just come in and be able to understand right now for this point that the market moves in 3 directions. Market moves up, market moves down, market moves sideways. We're going to go a lot further in depth on what that means here in the future. But for right now, be able to come in and start to find these structure points, these lows, highs, low, high. We're not concerned about this little stuff that happens in the middle here, right? Like these little things here, I'm not looking at these as any structure points here, because until that low is broken, we're still going high. Until this low is broken, still going up. Until that low is broken, going up, right? And then you see that broken, going to be the same thing here. I'm looking at these structure points as the lower highs, right? If this were to come up and break that, that'd be a different story, right? So coming in, being able to start to identify some of these structure points is going to be able to help you out, and knowing that we have, you know, bullish market structure, bearish market structure, and then we have that consolidation where we're creating equal highs and equal lows, not really creating any higher highs, not creating any lower lows, you know, just kind of moving sideways, prepping for some sort of manipulation. With that being said, guys, this was the basic introduction of market structure, and I'll see you guys in this next video. We'll be talking about the macro market structure and going into a little bit more on micro market structure as well.